have a look at a number of the things we need to have a look at regarding a scorecard. Why have a scorecard is probably an obvious question to start with. So having a scorecard, from our perspective, helps you have some direct feedback about what's going on in your business on a day-to-day, week-to-week, month-to-month basis. Rather than waiting until the end of the quarter or the end of the financial year and perhaps checking in with your accountant or your bookkeeper to get some feedback about how you're performing or your business is performing, the scorecard is about giving you direct feedback on a regular basis. And to put this in perspective, think of yourself as a football coach. Now, we have a great saying here that the score tells the story and the story is in the score. It's the reality of what's going on. Did you make money or did you lose money during the month? Were you on target or were you off track? The scoreboard, again, will give you that direct indication. So picture yourself as a sporting coach. And me being an AFL supporter, I love AFL, and so if I'm an AFL coach, and you pick your own code, but if you're an AFL coach, the thing that gives you an indication about how your team is performing on a minute-by-minute basis is the scoreboard. Now, the score is the main structure. Did you win? Did you lose? The score tells a story. But behind the scenes of the score, there's some other statistics that will give you an indication of what produced the result. So, for example, if your team had a win, and as the coach, you'd like to be able to replicate that result in the following weeks to come. Wouldn't it be great to know what produced that win? And on the other side of things, if your team had a loss, how could you analyse what produced that result so you don't have the same result happening on a regular basis? So as a football coach and AFL coach, even though the scoreboard gives me an indication of the real outcome, behind the scenes, several things are also being measured. The number of tackles, the number of kicks, the number of handballs, the number of marks, the number of times the ball went inside the forward 50, the number of unforced errors. So that will give you, an indication of which particular areas of the game needs to be worked on. So if you had a winning result, let's see if we can replicate what we did behind the scenes to give us the winning outcome. If we had a loss, then let's have a look at where we fell down, in particular to the competition, so we can go away, work on it, and ideally come back and have a better result the next time. And there's really no difference to a football game, and we see life and business as a game, as is to your business. Even though the result, which might be revenue, profitability, money that's in your pockets at the end of the week, the month, the year, is the real indication of how successful your business was. If you're having a winning month, wouldn't it be great to know what produced the win so you could replicate the same results again? And hey, if you didn't have a winning month, you were behind target, you actually lost money, it's really important to know what to change, modify, improvise or adapt so that that result doesn't happen again, and ideally not too frequently into the future. So that's the real purpose for having a scorecard, because it gives you the indication of what's going on behind the scenes and what you can then work on and fine-tune as quickly and as importantly as possible. So once we know why it's important to have your scorecard, you might ask the question, well, what do I need to measure? What's really important to measure? And this is something that's different from business to business. But let's have a look at some of the few key scores that can give you an indication of why your business is winning or it's not producing a winning result. One of the things that we talk about at the college is the importance of having a target, and particularly a revenue target. And a revenue target as opposed to your break-even target. And I'd like you to think that your break-even point is like the opposition. That to have a winning month and to actually make some money, you need to get past break-even. Now, it's very important to know exactly what your break-even revenue target is, which means you know exactly what it costs you to open the door, switch the lights on, pay your team, pay yourself, pay the rent, whatever it might be as far as your running expenses go. And that's almost like the opposition. You need to get past that first. So that's your minimal target. Then you may have some target above that, which gives you some great profits. So let's have a look at revenue or sales or total of dollars that come into the bank will have been affected and produced by a number of key scores. And an example of some of these key scores are your average dollar sale. If you have a higher average dollar sale with the same number of transactions or sales, you'll obviously get a higher revenue. If your average dollar sale was lower with the same number of transactions, it may affect your revenue. So average dollar sale is an important one. The number of sales and the number of transactions that were had during the month is an important one. If you're tracking how well your sales team are going or how well your conversion rate is, then that is another one that's important to measure. Perhaps it's the number of new clients that you had come on board as opposed to existing clients. Perhaps it's the value of invoices that were sent out, which could relate to the number of jobs that were completed and the invoices that were sent out. Because if you have an average number of debtor days, which means the number of days between when an invoice is sent out and the cash hits your bank account, if you have a target of the number of invoices that you send out every month, then that will give you an indication of future cash flow as well. And another one could be the number of inquiries that you actually receive for the month as well. So that's an indication of some of the key scores that can be measured. But obviously, depending on the business, and we'll have a look at a couple of example businesses in a minute, revenue, profitability are some big outcomes. Behind the scenes are some target scores or some smaller scores that are important to that.